Hello, my name is James Smith from GannAnalysis.net. You can email me at jamessmith@gannanalysis.net, or you can visit the website GannAnalysis.net. Now, today we're talking about Netflix. You can see here, this is not up to date because today the stock dropped 25%. It took out the 50% mark at 358 and just plunged. Now, my clients knew about this beforehand because they knew once you take out the 50% division from the high, you're going to get a big sell-off. This is called the square of the high. You take the high, you anchor from the high, and you use a scale, in this case, 2 points per week, that red line coming down from high, and where it crosses the zero line, completes the square of the high. So all these other lines are derivatives. This is a 1 by 2, which would be half of this line. Would, instead of 2 points per week, it'd be 1 point per week. And this is a 2 by 1 line, which would be twice the slope of this line. It would be 4 points per week. So halfway through the square is often a major trend change. And sure enough, we rallied to this 1 by 1, then sold off into the midpoint in time on the square of the high. That was a low, rallied back, came back, found support on the 1 by 1, rallied to the 3/4 division in time, and 1/4 down from high in price. That was an important top. Then we kind of traded sideways. In that final run up, we found resistance on a 1 by 2 line drawn up from the center point of the square of the high. That gave you the high. I warned clients last year to get out of this stock and that it was going to start a major correction in 2022. And sure enough, it has. And I also told them, look, when you take out that 50% mark, this is exactly what I've been telling clients. Reaction rally after the bounce off the 50% mark, but when it closes below 358, the crash resumes. So initially you did bounce, and then you took it out. You had this chopping around, and then suddenly out of the blue, the stock gets slammed. Now, notice here, May 27th, 2022 is coming up. That's about just over a month away. The midway point of the square of the high was important. I believe the end of this square will also be important. That might be a low for this stock. So you notice where I have circles, we have divisions in time. And of course, the big circle is where we start the square, we anchor from the high. But if we get to the completion of the square in time and we sell off into it, that might be when, if you were looking to buy the stock, you might think about the possibility of buying. Honestly, I would wait. You know, if it sells off as badly as I think, it's already gotten crushed today. Even after the square is complete in time, give it some time to breathe. You know, you open a bottle of wine, you don't drink it right away, you let it breathe. You know, anytime you have this big a sell-off, got to give it time to breathe, you know, even after it completes a major cycle. Square of the high is completion of the square of the high in time is a major cycle, but you don't really want to jump on board if something has suffered this badly. Even if it gets way down here, you still want to let it, you know, it's going to take time to build a base. It might take a few months, 6 months. It might take quite a while before it has the courage to go back up again. So this is an interesting chart, and you're probably wondering, oh, I don't think it ever got to 716. Well, actually it did. You just don't know it because this is the way the market, you know, data vendors normally show you corrupted data. They call it split adjusted. I call it corrupted data because what Gann said is that the price at which something trades, that's what's important. So you don't want to look at split adjusted because you would not be able to draw the square of the high This anchor is anchored in space. There's nothing to attach to because the data has been corrupted by the data vendor. So that's not right. That's not what you want. You want the where it really traded. This move down here was a split. They split the stock. And the high, though, that it actually traded at, the very high was 716. We almost got there here last year before we had this wicked sell-off. So this was a split. This was not the market selling off. This is the market selling off. So the importance of Gann is that that when you take out the 50% mark of high or 50% of a range, something bad's going to happen. So it already looked pretty ugly here, and people would say, "Oh, it's a buying opportunity." That's the kind of thing you would hear from the media because, they see how much it's sold off. They don't actually recognize you're in a bear market. So from their perspective, oh yeah, I'll buy it right here. And sure enough, they get slaughtered. So you can see this chart shows you the price action today because this is showing you real-time history, whereas this one is end-of-day data. It does not show the wicked sell-off from today. So I like to see what's happening intraday just like anybody else. So you can see we're down at 223 and still declining. This thing, it looks pretty freaking ugly. But, by May 27th, hopefully this thing will bottom in sync with the completion of the square of the high. So if you like this sort of style of analysis, you can learn a lot just by taking a 1-month trial subscription. What I would suggest is you go to the website and you'll see a shop button up here in the upper right corner. You can't really see it. I've obscured it. Let's see if I can bring this down. Okay. Here, if you go to the website, you see this shop button. You click on the shop button. You'll have 3 choices. One would be a 3-month trial subscription, and the other would be custom report, and the third one would be a 1-month trial subscription. If you want, just try it out for a month. It's not expensive. You try it out, see how it goes. So remember, if you want to go to the website, it's www.gannanalysis.net, and you can send me an email, jamesmith@gannanalysis.net. Register to the website. I'll send you a free report on whatever market you're interested in. But honestly, I think now's the time that you want to take a trial subscription. Why? Because we are in the midst of a major correction in the stock market. You want to know blow by blow how this is going to play out. And for those people who owned Netflix, I'm sorry, but that's why you want to do Gann, because you want to be able to see this slaughter. You don't want to wake up one morning and see this. You want to know beforehand that, oh my God, I need to get out because we're below 358. That's the 50% division. It's half the high of 716 is 358. I know I have to get out of this stock. You could have saved yourself a lot of grief. So if that appeals to you, keep in mind that Netflix is not the only FANG stock that is going to get slaughtered. The party's just getting started. So if you own some FANG stocks, if you own some major tech stocks, and you think, oh my God, I've got to see what's going to happen, where are the critical levels? That's why you want to subscribe for 1 month or 3 months. Try it out. You're not obligated to continue. You try it out and see if it works for you. At the very least, you want to avoid waking up one morning and seeing your stock down like this. You don't want to be in that position.